Hello everyone, this is Tina, guest market analyst from FPG. Today is the 6th of May, Tuesday. US stock market snapped a 9-day winning streak as the investors were awaiting potential trade talks between the US and China. At the same time, this week there will be the Fed decision. The US dollar weakened against most other currencies, while gold has surged again. Crude oil prices dropped to a multi-year low level after the OPEC Plus decided to extend its production hikes in June. It seems like the global markets are in a wait-and-see mode. Overall, the risk sentiment recovered from the intense sell-off in April. And what could be the potential market trend in the near future? I'll discuss the potential market trends of the euro against US dollar and WTI crude oil in this video. Let's get started. The first one, let's have a look at the euro against the US dollar. The euro had this heaviest weight in the US dollar index, hence the euro trend against US dollar would reflect the dollar's trend. So at this moment, the euro against US dollar has put back from a multi-year high level. Now it's testing a key support level, which is a 61.8% Fibonacci retracement. So this Fibonacci retracement, I connect the high in 2020 and the low in 2022. So this is a long-term trend. Euro has rebounded sharply since March. Now I think the uptrend is intact. However, MSD is overbought right now. If there is a good progress in the trade talks between the US and China, the sentiment would continue recovering and cause a rebound, continue rebounding in the US dollar. So this support level will be critical for the near-term trend. Once the euro against US dollar break down below this support level with 1.1270, I think it would just end this uptrend for now and go down again, test the potential support level. The next one is 50% Fibonacci retracement, so that would be 1.0940, and also this moving average, which is 50-day moving average, will be its potential support as well. However, if Donald Trump would insist this aggressive tariff stance, it might cause continue weakening the US dollar, and then the peer will rebound from here and continue its uptrend. The next one is WTI crude oil. WTI crude oil fell sharply over the weekend as the OPEC Plus decided to hike its production again in June. So at this moment, as the global economic outlook darkened due to the global trade war, so this causes a sharp decline in crude oil prices. Right now, the oil prices actually is touching a multi-year low, which is the lowest since 2021. But the short term now is forming a potential double bottom here. So in the last video, I said oil has its potential to rebound. So this is very critical supporting level here, 55 US dollar per barrel. Once it rebound, here's a critical pivotal resistance would be this 50-day moving average, as well as the previous support level now becomes a resistance level. It has its potential to rebound from here and continue this range bound movement for a while. And also it depending on if the trade policy would change, if sentiment easing from the trade tensions, I would say the crude oil could continue rebounding if it can go back above this resistance level, and then the long-term downtrend line would be the next key resistance.